Hi there, Serial Trader here. Let's do an update on the major US indices. Now, since the last video, there was a potential tradable high in place at 25.20.27, and initially it held, and then we started rolling over. Things were looking good, for the downside, and then we had a fairly sudden reversal as of Friday's trade, and we actually broke that potential pivot, and we're making new highs above that level at this point. Now, nothing really changed on this overall daily chart. We don't have 4-1 overlap yet, so there's no need to change the overall even short-term wave count. So I'll leave everything in place there. But what we do need to look at is the shorter-term patterns, obviously. So we have this ABC up for a zigzag. And if you recall, I'll just quickly show it here. We had that nice, AC equality. Everything was looking quite good. See, we basically hit AC equality to a T, 25.19.12. And AC equality was basically off by, a point or so. So that was looking really good. And then we came down. Started breaking some short-term support levels, came back up to retest that pivot. It held. We made a lower high, just slightly lower high at 25.19.49, just below that 25.20.27. And then we started going down nicely, and it looked like we just had our simple ABC up for wave 4, right? And we were heading down in wave 5, but that's not how it actually played out. But the question is, what is the pattern? Well, this is still an ABC up for a zigzag, but it's part of an overall larger corrective pattern that seems to be unfolding. So right now I'm labeling it tentatively as ABC up for W. Then we had ABC down for X. And now we're likely working another ABC up for wave Y of what will be a double zigzag wave 4, as long as we don't overlap with the termination point of this wave 1, which comes in at 25.83.23. So anything at or below 25.83.23 is acceptable for this to still be labeled wave 4. And that's obviously the preferable scenario. Also, you see, so this is our wave 4 overlap level, the way it's currently labeled. We also have this support level, or I should say resistance level, from this previous corrective rally. That comes in at 25.85.29, which is slightly above that 4-1 overlap level. So you have a nice confluence of kind of former support that became resistance, and now looking for that area to act as resistance again, should we get up to it. So definitely looking for a reaction around that level. Say we do get the 4-1 overlap, even if it's slight, we'll have to revamp this wave count, but the message will still be overall the same directionally, and that's that we'll have a WXY double zigzag, whether it is labeled as a wave 4 or something else remains to be seen, and then you'd be looking lower again. And currently with my trade, I didn't make any changes to it yet. It's a relatively small position for me, so I'm looking for it to get up here to this level, see what happens there. If we can get a nice reversal, maybe add to the position at that point with a new level to define the overall risk against. But right now I'm just kind of waiting and watching with the original position. And okay, there's another scenario where what if this is totally wrong and we're about to turn very bullish here? Well, we're going to know soon. And we'll obviously have to rethink our shorter term wave count here into something more impulsive. But I've drawn this base channel, okay? So if we get up to the top of the base channel, right around this resistance area we're looking at, and the double zigzag completes, then we start rolling over and get down below the base channel, we can be pretty confident we just had a corrective rally up and we're heading down again. Now, if we get up and blast through the upper boundary line of this base channel and just completely blast through this resistance zone, then we can entertain that maybe we have some sort of impulse wave at some degree starting to the upside. Now, obviously, I don't think that's going to be the case, but let the chart decide. So right now, waiting for it to kind of find its top here, see if we can get a reaction, and also looking for other signals, like candlestick signals for a sell, and also the VIX tool. I'll get to that in a moment, what we're looking for there. But currently, we still appear to have some sort of corrective rally that's incomplete underway. But it could, you know, I highlighted a couple relationships here, and just bear with me. So the WX Y. So we have the 618 relationship between W and Y projected off of the X termination point. That would come in at 25.52.12. That's fairly close to current levels, maybe 20 points or so away from the current levels. And then the equality relationship would be 26.1898, which would go beyond the 4-1 overlap level, although it wouldn't actually, if we have to relabel this a bit and say this is the actual wave 1 that we need to be basing this wave 4 off of. If that was the case, that comes into play at 26.21.53. So if we just hit equality to a T in reverse, that would still respect not overlapping with that wave 1. We might have to reconsider the subdivisions after that wave 1, etc. But so a couple areas to look for. We have the 618 relationship, the equality relationship. I'll just get rid of the initial relationships there for the small degree A and C. And then we just have these areas of former support now looking to become resistance. And I'd like to see it basically stop right around here or before that. But this is another area to look for, you know, that 26.20, 26.22 area. And then if we start going beyond that, we have to start, you know, entertaining that we may have something more bullish going on. But again, not currently anticipating that. All right, so that's kind of the short-term scenario. Very, very short-term, looking higher. But after that, we're looking for it to roll over. It's currently the outlook. Overall wave count remains unchanged for now on the daily chart. And we'll head over to the Thinkorswim candlestick chart. Now, some interesting things here. I believe I mentioned in a previous video that, you know, coming up in some sort of bear market rally, just to hit the 20-day simple moving average that's been declining wouldn't be an unusual move up, you know, even in a bearish situation. So we basically come up to that on this daily candlestick chart. We hit the 20-day simple moving average intraday and slightly reversed off of it into the close on Friday. And now, there's obviously no reason to believe that the top is in. As we've looked at on the Elliott wave chart, it appears that there needs to be a little more upside. But I just thought that's an interesting area to be looking at here, just as far as moving averages go. Then, of course, up here we have the 50-day simple moving average, which would be kind of the next moving average reaction to look for if we don't find resistance on the 20. And with a day or two more trading, that would kind of get close to this former support zone here at 26.20 or so. So we'll look for these levels. Since we did close a week, and I'll mention we are above the T line and the 3T line on the daily chart here. And the 3T line is crossing above the T line. So very short-term bullish appearance here. Okay, now on the weekly chart, we're going to be looking at the week we just finished there. So yeah, we're definitely doing a weekly bounce, but you can see we're still well below the weekly T line, which has served as nice resistance all the way down. So that could be another area that we stop at as well, or you know, resist from, and that's currently sitting around that 25.80 mark or so, which is right around that very short-term 4-1 overlap area as well. So that's an interesting area to look at. That's probably good for now for SPX on this chart. We'll go to the Dow Jones Industrial Average. Okay, now on the daily, the Dow basically coming up to its 20-day simple moving average as well and finding a little bit of resistance there on a closing basis at least. And the Dow above its T-line and the 3 T-lines crossing above the T-line. If we look at the... now the Dow is quite a bit farther away from its equivalent 4-1 overlap. That would come in at, let's see here, 23,881. And right now we're at 23,000 145. So there's definitely still some, or sorry, we're right at 23,433. So there's definitely still some room to run before we'd encounter foreign overlap on the Dow for its equivalent levels. Now if we look at the weekly chart of the Dow, still well below the weekly T-line, and that's currently sitting at 23,928. So quite a bit of room to go up and hit that and reverse from potentially, although there's nothing saying that we have to go up and touch it. Although you can see on previous rally attempts, we do come close to that weekly T-line, have some interaction with it a number of times here. So that's certainly an area to look for on this balance that we're in currently. Okay, we'll go to the Nasdaq Composite now. And on the Nasdaq Composite daily, very, very similar charts, all of these. So the Nasdaq Composite basically closing right at its 20-day simple moving average. So that's potential area to find resistance. The Nasdaq's 4-1 overlap area is right here, and that'd be at 68.78.99. So let's call it 68.79. Right now we're currently at 67.38.86. So there's some wiggle room there before we'd encounter that overlap. And let's see. Yeah, obviously above the daily T-line, and the 3 T-lines crossed above the T-line. Look at the weekly chart. Okay, so weekly chart, we're below the weekly T-line. That would come into play currently at 68.65.99. So some wiggle room there before we touch the weekly T-line. And I believe that comes close to that 4-on overlap area on the Nasdaq as well, that weekly T-line. Alright, so that's the Nasdaq. And we'll go look at the VIX here. So on the VIX, obviously a pullback in VIX as equities have had a bounce, although it looks like we're trying to set a higher low to maintain our series of higher highs and higher lows in this VIX uptrend that we're in. And basically on this daily VIX chart, anything above let's see what this level is, 2034. So anything above 2034 will be a higher low on the daily VIX chart here. But the real level I'd want to see hold, would be the 16 area, as that kind of served as a double bottom on VIX. And that's also that reaction we had off that 200-day moving average before we started our uptrend in VIX and resumed our downtrend in the stock indexes. So interesting to see what happens here at VIX. I do expect it to, find some support and then begin trending up again as equities regain their weakness. Now, speaking of VIX, we'll go to our new tool again, and the VIX tool. So we haven't actually gotten a signal for a while here, and we initially did have some divergence. We basically had a little, almost a double top up here on VVIX, but we made a higher high on VIX. And then we did have a, well, actually that was a signal. It was a buy signal. So we went below the red moving average on VVIX, and then we simultaneously, shortly thereafter, got above the blue moving average on SPX, and that was the buy signal. And I think I highlighted that in the last video. It produced roughly an 80-point rally, a little more now, after enduring some, short-term downside. But now what we're looking at, from the perspective of this tool, okay, as far as looking for an SPX sell signal. So we're starting to see our divergence. So right here you have VIX making lower lows, and you have VVIX making a divergence there. So VVIX put its low and now is going up, and simultaneously VIX is making new lows. So you have the divergence there. VVIX is getting close to crossing above that red moving average. That'll be the first step of the signal now that we have the divergence. And then at that point, after VVIX crosses above the red moving average, you'd want to see SPX cross below its blue moving average, and that'd be a confirmed sell signal using this tool. So I'll continue watching this. And it's quite a reliable thing to watch here for both buy and sell signals. So I'll pay close attention to it. Maybe I won't initiate adding to my SPY put position until I see a confirmed signal here, but we'll see. I usually like to try and get the front run on the signal. Whether that's a good or a bad decision usually is only revealed far after the fact. Okay, now that's probably good for now. See what this coming week brings, and we'll check in as something interesting develops next week. All right, Serial Trader signing off.